Election day is here as investors brace for the results. Welcome to Market Insight. I'm Elena Casas. As Americans go to the polls in a contest that appears a dead heat to the very end, the results could rattle markets around the world. The consequences for tax, tariffs, and therefore US debt, treasuries, and the dollar could be radically different depending on who wins. We've already seen moves in the bond market that were seen last week as the pricing in of a Trump victory, only for some of those trades to be unwound as betting markets narrowed. Joining me now to make sense of all that is John Stoltzfus, Chief Investment Strategist at Oppenheimer Asset Management. John, hello. You said in your notes that any clear result would be a relief for the market. Does that mean you're expecting a lot of volatility if the result is not clear for several days?
No, actually not, Elena. I would just say it's whenever we get the clear results, as we do expect, that we'll see the markets have a relief rally, which tends to be the case whenever you have an election that has you're coming down and it looks like it's neck and neck and a lot of drama, and with different philosophies and ideologies behind either candidate. You get to a point, a lot of drama, and then there's relax. The market sighs a sigh of relief.
Traders in the currency markets are clearly trying to insure against big moves. Those types of moves have reached their highest since November 2016. Might the dollar come under pressure in a drawn-out vote-counting situation?
You know, I really think if it does come under pressure, it will be mainly the fast money players in the market, the traders, the trading floors. The trend in the dollar would seem to us, based on where the Fed is thinking in terms of beginning the process of cutting its benchmark rate beyond the election, we'd have to think that the trend is for the dollar to weaken some. But here, any drama, I don't really think so. I mean, if they get some drama, it could pump the dollar higher, on if it seems like any instability. The dollar is always where everybody runs when they get worried. So I don't know. I don't think they're going to sell the dollar sharply. It's not practical.
You also pointed out in your notes that the impact of policies often isn't seen until the year after an election. The market has recently been rising on the hope that inflation has been beaten. What if a different tariff and tax policy reignites inflation?
Well, that we would have to see, and we would have to see what type of inflation it would be. Right now, I think really the Fed has been remarkably sensitive in the process of battling inflation. It's brought it down very close, or at least much closer than one would have expected, to its 2% target, depending on which gauge you use that the Fed's looking at. And we would have to think that we'll have to wait. The real question is if Trump wins and we're going to see, is it the threat of tariffs that really is what this is all about, or is it actual tariffs? And one needs to remember that all the tariffs that Trump had put in, as I recall, most of them were maintained and even increased by the Biden administration. So I don't know. We'll really have to look. I think the market, Elena, mainly looks for revenue growth and profitability. And as long as companies can work it out, depending upon where they source goods, how efficient they are on manufacturing them or whatever, the market could really digest this all pretty well.
Do you think then that the threat of the impact of higher tariffs on the global trade of US companies has been exaggerated?
I think it has been. I think one thing, with former President Trump is there's always a lot of drama and a lot of tough bargaining. But oftentimes, when his process comes around, it's actually mitigated by a lot of the people he has around him when he makes a decision. And on the other hand, with Harris, the story is there. We'd have to see. It appears that she has pivoted somewhat away from the extreme left And so we would have to think probably would keep the tariffs that Biden has kept in, maybe raise them a little bit. But at the same time, we have to remember it's not a normal situation with global trade. China has been known to undercut its competitors in a very tough manner. And that's what this whole thing is really about. And it's trying to get a more fair playing level for U.S. trade, either administration.
US equities are still hovering close to their recent record highs. You did say in your notes you thought they had further to go, whatever happens. Why are you bullish?
Well, Elena, I'm bullish because we think that both the business and the consumer have technology deeply embedded in their cycle of whether it's near-term economics or secular growth. And we think we're all on the upgrade cycle. It creates greater efficiencies for business and greater efficiencies for the consumer. We can't help but think maybe one of the reasons why the balance sheets of corporations are as good as they are today and the consumers' balance sheets are at least quite resilient overall are likely due to greater sophistication that comes perhaps in a subtle way just by the usage of technology and advanced information, which we didn't always get in the days of just getting the newspaper in the morning.
John Stoltzfus of Oppenheimer Asset Management, thank you so much for that analysis. And that's your market insight. Don't forget, you can watch more videos on Reuters.com.